We have a great show for you guys just right before SoFi earnings, which is on Tuesday. We're all going to be here with many special guests. We're a couple days away and we have some exciting stuff to talk about. Do we want to jump into some exciting news? Tevis, I gave him a call today while he was working. Let's call it work. I was asking him about some pretty important updates, I guess, to SoFi that I needed some technical product help on. SoFi is about to release a huge update.
Okay, so basically, if you just go onto the iOS store and you look at their versioning, there's this version format called major, middle, minor, or major, minor. So here you have the version numbers. Those numbers actually mean something in software development. And the reason why is because it's just a more structured approach to releasing software. Really, what the version numbers mean is breaking out what the actual release contains in that version. And what we saw with SoFi, if you scroll up, so this is the iOS App Store. If you scroll down here, you can look at the version history. Generally speaking, companies will have release notes of what is included in this version. SoFi does like the same thing over and over again. Look at the versions 2.188, 2.189, 2.190, 2.191, so on and so forth. And look at the dates. In software development, you generally have a cadence of releases. So for SoFi, it seems as though they release weekly. Feb 6th, 12th, 20, 26, March 6th, March 11th, March 18th, March 25th. And so whatever is in the build that's going to be cut on that given day or released on that given day, it's going to enter the new version. That could be patches, that could be, minor bug fixes, it could be minor features, major features, whatnot. And the biggest difference here is that we jump from 2.21 to version 3.0. Version 3, when we jump from 2.2 to version 3, that's the big major release. And then my thoughts is that the 3.0.5 is simply bug fixes based on that release. So they're internally testing that release. Generally speaking, you'll have like a gradual or a staged rollout if it's major features. Even if you don't release something externally, which we're going to talk about in a second, how that works, is you'll want to internally test it. So you make sure that you can prepare for a major release. You don't want to release to millions of people and make sure that that version is not working or has a bug or whatnot. And so essentially, depending on what that version number is, generally speaking, it'll speak to the how big the release is. So major releases are, complete overhauls of existing functionality, are complete overhauls of the back end. So what could this mean? It could mean that the app is getting substantial new enhancements, either new modules altogether. So if you have a new product offering, then you're going to have a new module in the app, a complete overhaul from the UX, so a significant UI redesign in terms of the look and feel. It could also be, Tannor, you had this idea in the morning, a complete back-end change, which could have performance improvements. As we know, the performance has been somewhat iffy, security enhancements, or SoFi moving on to Technisys altogether, right? If we're thinking about the back end architecture transition that this could mean. The people who have updated their SoFi app on their iOS or Google Play Store, the app might look exactly the same to them. And the reason why is because generally for large releases, it's best practice to hide the feature behind the feature flag. This means that you'll have downloaded the new functionality when you updated your app, but it's not visible to you until they turn it on because they're still testing behind the scenes and maybe addressing some bugs with a beta group, or maybe they're doing a gradual stage rollout, which is also best practice. You want to, roll it out to certain groups of people before you roll it out to your entire user base, because you want to make sure that you can control for any things that might go wrong. Really, I think overall, this is a massive hint, and it comes days before earnings. They've put together the pieces for this 2 weeks before earnings. I mentioned the last SoFi Weekly, my prediction was that if they really wanted to make the stock go up, they could drop a PR alongside their earnings results. And then you can imagine they double beat, raise guidance, and then drop a press release around, hey, this is our new feature. This is a new, product offering that we're offering. This is how we're going to get to that 75% growth on financial services. Here's how that's going to look. Oh, and by the way, it's live in your app right now. You don't have to
Right.
download anything for it.
Is this Technisys or is this credit cards, SMB? What are we getting at? I know that you don't know. I'm talking speculation here.
I mean, my speculation would be just given what they've mentioned before in terms of the credit card innovation, that there might be some overhaul there, whether they're expanding out that module altogether. I mean, generally speaking, major version releases are not really backwards compatible. And so if they're changing something in their database schema in terms of how they're architecting their data from a tables perspective on the back end, like this is not stuff that it's like a one-way door type of thing. I mean, it could be Technisys, and I think that news would be significant in itself, but I don't think it would be as significant as a new product offering or some innovation from a user experience perspective in terms of what impact it would have to the actual like perception of SoFi specifically.
Actually, very excited to see if it is user interface stuff. Phil Rabin was brought in sometime in March, I think early March it was, from Uber. He was in charge of this. And if you look at the guy's resume on LinkedIn, like it just, yeah, this is exactly who SoFi needed to really push out these improvements and changes. And so, and I know these major developments can take some time, but it's been long enough that he's been there, a little over 3 months, that he'll at least have some hand in what is coming out. And so,
I think that it's Technisys fully taking over as the one core. The app has been live on the App Store for, according to the thing that I was reading, like 7, 8 years now. That is the version history that they've been on since they've been on the App Store. They finally went from 2 to 3. Like, I think that it's a massive deal. That is not the same equivalent of them launching a HELOC product or something like this. They've launched tons of new products, and we have not gotten those step ups in app updates. If it is major, it might not be customer facing major, but it might be major in the way that they are working on the back end in a completely different form.
I think you're onto something, because if you look at version 1, version 2, version 3, I think an interesting exercise, if there is more data in terms of the version history that goes all the way back, would be to look at the dates when the major versions shifted. So when did they get on version 2? Was there anything significant that was announced? What did that look like? And when have new products been launched? So for example, in 2018, 2019, they launched pretty much everything that's on the SoFi app. Like, what did that look like from a release history perspective? So I think that could be an interesting exercise. I don't know if we have it ready to do it right now. I might just do like a separate video on it, but it could very well be Technisys. Absolutely.
Like Josh is saying, there were a couple updates on the SoFi Plus screen, everything like that. Like I said, I don't think it's going to be as small as something like that would be. But one thing I will say to the people who are saying that their version is still the old version, it might be because this is more of a dormant update. If it is a product release or something like this, that they still need to push it out live, but it's on their, I guess, sort of a drafted version of the app, which can
So
happen.
feature flags, version controls, all of these different toggles are incredibly common across all the apps that you use today. If somebody is saying, "Oh, I saw this new feature on SoFi Plus," or "I saw this new," like that can be like 4 releases ago. It can be last
yeah.
month that they launched this in the app, and they can have this staged rollout because there's a natural testing period that they're going to have. We generally do stage rollouts like 2, 3 weeks before full rollouts, and we're a smaller company. So with SoFi, as you extrapolate that number of total users, you go into the millions of users that have this app on their phone. You want to really make sure that you can test for a month or so. What you might be seeing if you're like, oh, my app just updated and there's a new feature, that might be have been released in February or March.
Anything else that you guys found was particularly exciting this week going into earnings?
Probably worth a mention is the short interest is something that we should probably bring up. The short interest is still very high going in. So he's got it all right there. Love it. Do it every single time, Tevis. This is your job now. I mean, he goes through everything. And just the short interest right here, 180, almost 5 million shares, almost 18% short interest. Of course, this is lagging. So maybe that's changed a lot since the last official data point. I doubt it. And it's just shocking going into this. This is a company that is profitable, and consensus is 0.00 nothing, like no EPS. It doesn't even round up to 1 cent. No, the short interest is just, it seems reckless, especially given the other piece here is, of course, we had PCE that came out today, and it was basically on consensus. It's falling. A lot of commodity price action I'm seeing is falling a lot. And rate cuts I haven't looked at the update from today, but it's still looking like the consensus is that we're going to get a rate cut in September. And I've been skeptical of that before, but I would be quite surprised if there's not something done in September, even if it's just a quarter point. And all those things basically to say is between earnings, between we see the rotation, and I know SoFi is not small cap, but it's treated like that sometimes. And also with rate cuts, it's just like having this stock short at 18% seems really reckless and insane.
I mean, look, the reason I posted those three images in particular together is because I think they tell a story. This company has a very incredibly consistent history of beating analyst estimates. Analysts are estimating nothing, and people are betting on the fact that, analysts are going to be right. And
Not just
history
right. I think like if you have 18% short, you're almost betting that it's even worse.
We know, I mean, even at the hint of rate cuts a couple of weeks ago, and actually the stock's been doing pretty well compared to the overall market. It's not small cap, but it's traded a bit like that, especially as the narrative is on those rate cuts.
The Russell has broken out of this 3.5-year downtrend. And I think that's significant. And the reason why I think that's significant is because we know that SoFi moves in line, with small caps. You can see it could retest it, absolutely. And this is technical, so take it with a grain of salt. But we're moving upwards on the expectation of the rate cuts. The markets are now pricing in at 100% that we're going to have rate cuts in September. And small caps, which have been disproportionately beaten down by higher rates because they're perceived as riskier. I mean, not all of them are profitable. Not all of them have the same prospects, or not all of them are safe havens like the mega caps are. Those ones are going to move disproportionately higher when rates start to come down. And the fact of the matter is that SoFi moves very much in conjunction with the Russell 2000. That bodes well for SoFi. Q2 seems to me to be the last sort of hurdle for the company to pass. And if they do really well, we know that per their own guidance, Q3 and Q4 are going to be much stronger. And the company is going to start to actually accelerate, diversify their revenue streams outside of lending, reduce their dependence on that single segment. By doing so, diversify how the market perceives them, and probably get a hybrid valuation in the process. They just need to pass that last hurdle of Q2. And I really think that after that happens, institutional ownership, which is now, I think, at record highs, we can pull up that chart as well. I think that's going to continue moving higher. And I think the short interest is going to start moving down, and the stock is going to start moving up, because there's macro tailwinds and there's company specific tailwinds that are all working together.
I don't think short volume necessarily correlates exactly one-to-one with short interest. The daily short volume, if you go through and look at what we've seen since May, it can be anywhere between lows of 12% on very specific days, but really in the ballpark of 17%, because some highs in 22 and 13 roughly. But the last week or so, we've gotten 11, 12, 11, 11, 10%. That doesn't mean that the average short interest is going to fall. It is interesting to sort of see, is this a earnings related dip in short volume, or is this a rates are coming in and people are a little bit scared to get caught with their hands in the cookie jar?
Well, so the shorts tell one story, and if this is the other side of the story that many people don't see. Institutional ownership, look at that trend line in terms of what that adoption is looking like. And on one hand, you can see the short interest and you can say, okay, everybody's betting against SoFi, but this institutional ownership keeps climbing higher and higher on the back of the profitability, on the back of the good results that the company is reporting. And that trend doesn't seem to be stopping. In fact, it seems to be accelerating. That also, I think, tells a story of where that attention is going to go. And that could be a leading indicator for where the stock goes.
Roy, you're selling SoFi.
Selling cash secured puts. I've taken on options contracts, a good number of them, agreeing to take on more SoFi if the stock price is at or under 650 next Friday. So it's an earnings play, decent amount of premium, especially earlier in the week. And I'm happy with buying SoFi at a net of 630, 633, 635. It's stupidly priced right now. I'm not expecting a great earnings or anything, and it absolutely could fall under 650. So if that happens, my SoFi position has more than doubled. I'm good getting assigned. See, that's the thing, is the way that I handle options is if I'm selling covered calls, I have to be okay with selling the stock at that price. I might roll out depending on what happens. And likewise, if I'm doing cash secured puts, I only do it in stocks that I'm interested in owning and only at a price that I'm comfortable having it at. So if I'm like, hey, I want to buy SoFi anyway, why not do cash secured puts? I have a lot. If I didn't have any SoFi, I'd just be buying the stock. But I want it very cheap. And yes, I know it was under 630, whatever that price is. Previously, I didn't have the funds then. So and if SoFi instead does the opposite and it goes up to 10, 11, 12, 13, it's like, sweet. I just get to keep the premium. I have a lot of SoFi already. So I'm happy either way. It was 20 cents for the ones I think I sold on Wednesday. I think the lowest I got was 14. It's not amazing, but it's just, SoFi has actually done well the last couple of days. So I was actually really hoping we get one more good big red day, and that would really add to the premiums a lot. But
looking on LinkedIn, there's a whole bunch of new roles that SoFi is hiring for, particularly with home loans specifically. So it seems as though from a hiring perspective that they're ramping up that Wyndham side of their business. I'm just looking at it now, mortgage processor, processing manager for home loans in Charlotte. They're hiring all these people and all of these jobs. I mean, I filtered by past week and it has 129 results, 32 results in the past 24 hours. Like they're really getting ready to ramp up. Generally speaking, they're hiring a lot of people in risk and a lot of people on the banking side of their business. That's their biggest single segment of hiring, but a lot of people in mortgages specifically. I found that particularly interesting. I mean, of course, this is all stuff that we're talking about today, and it's going to become fairly redundant by Tuesday because the SoFi executive team is going to be talking about this stuff on the actual earnings call as part of their guidance for the rest of the year. Mortgages, as rates come down, the home loan segment is going to be ramping up. Wyndham Capital is going to be ramping up. Student loans are going to be ramping up, and SoFi is getting ahead of that curve to already prepare for this ramp up. And we can see it even right now. If you just go on LinkedIn, you go to SoFi, you filter by their jobs over the past week, and you just start scrolling, you'll start to see trends.
So Robinhood, I popped on my Robinhood app today, and it said, hey, there's a 5-minute survey. It takes more like 10 minutes, but whatever. And I found it really interesting because they're talking about Robinhood gold prices and everything. But let's skip all that because this is SoFi Weekly. They were wanting to look at different services that they could add to Robinhood Gold that would be attractive. And they had more than just these 4. But one of them that they mentioned was discounted mortgage rates. And so I was like, I'm really interested in that. Of course, alternative assets, educational stuff, premium lifestyle benefits, actually having a professional services and everything. But that right there was what I was really interested in. They asked, when I was kind of thinking of purchasing a home, if they did provide an offer, what is it that I'm actually looking at? Robinhood provided a mortgage offer. It seems like more than just a referral service. Maybe they're looking at an acquisition. And of course, they had some questions of like what the monthly paid feature would be worth in that scenario. So I just thought it was an indication, and I've seen this not just from Robinhood, but a couple others as well, this anticipation of when rates are cut, then the housing market really starts performing a bit better. Like it's not going to instantly change in 1 second, although maybe it will depending on the size of the cut. But that seems like it's coming. Maybe not so much later this year, but early next year, especially in spring when it's just usually the hot season for selling homes. I think SoFi is going to do very well here, and of course with student loans as well. To the point where, I mean, when you see somebody like Robinhood, and I know that they want to democratize finance, and this is part of finance, but when they're at least thinking about getting into this game somehow, there's something there.
You can look at the number of openings that they have. This doesn't filter by the most recent like LinkedIn would, but it'll just give you an idea of the aggregate numbers. Data is a really big category here. Data scientist, machine learning, data engineer on the data platform. Data has 11, engineering has 17. This is general, just engineering. Mortgage has 7 openings. Loan originator, 4 different locations, processor, so on and so forth. Operations, sales, and service, mostly fraud, operations, director of fraud management. Risk is 17, and then SoFi Bank is 20. So if you were to do the top 3 categories, it would be bank, risk, engineering, data, then mortgage, and then everything else. Yeah, I mean, risk is always very, very large in terms of hiring. They're always looking for people in their risk departments. And then in SoFi Bank, you have a mortgage people here as well in SoFi Bank. So they might be doubling down, I guess, on some of these roles, what category they include those people. And I think this is a good indication if you ever want to see like, hey, what are they focusing on right now? The data aspect as well is pretty interesting. If we just want to put our tinfoil hat on and we just say, okay, let's just say the third version of that app, the 3.0, is something to do with Technisys. They might be getting smarter at making decision making in the app, specifically leveraging some type of machine learning. These are not Galileo hires, right? Galileo has a specific page where they hire their own people. Theirs are almost exclusively software engineers and data engineers. So this is just for SoFi specifically. So
if you look at Cathie's arc, like one of those things where it actually tracks her buys and sells, Cathie has not sold SoFi. Okay. And that's on a day-to-day basis.
is it just outflows?
Exactly. The fund has shrunk between Q1 numbers and Q2 numbers without changing the weightings of all their funds. Just essentially across the board, she's sold every single one of her positions because it's smaller than it was back the last time they filed. The selling, quote unquote selling, is like saying, the S&P is selling Nvidia. It's like, I don't know. Like if the S&P goes down, they're selling everything. It's just total outflows. That's it. Yeah, it caught a little bit of steam, but I would not worry about that. That's just people not betting on Cathie, not Cathie not betting on SoFi.
For some reason, I'm struggling to pull it up, but I get those emails from them.
It wasn't in the emails because I checked the emails after the news came out and I didn't see it there either.
Exactly. It was a 13F filing for the quarterly changes of the fund that her position in SoFi has gone down quarter over quarter. But if you actually look at her purchases, what she's buying and selling, there's been not a day that she's sold in my memory over the last 3 months.
Yeah, so it's like a nothing burger basically.
No, it's just people are not unfortunate to Cathie. They're just here. I'll show you guys once again because I just did this on my live stream. She can change the weightings, but that isn't what we're looking at here. The weightings are the same. The outflows are different. This is April 1st. Okay. You can see at the top the O and the C that's open and close. It's anywhere between $50 per share. Assuming that this fund has the same amount of shares, then the inflows are, going to control the price, which last time I remember, this is a closed fund. On July 1st, which is the next quarter, so this is a 3-month time period. So this is the end of Q2. We're at an open close of about $44. So it's gone down roughly 12%. How much did SoFi go down? 10% in the 13F filing. So she actually increased her holdings to negate that small change in the amount that the fund overall has outflowed. So it's actually positive news. And I'll just do this one more time. ARC F, if we're looking at that one, maybe her more prominent fund that people look at for SoFi. Open and close, $30 July 1st, $28-ish, $27, $28. So once again, outflows overall. The weightings are what we're worried about with Cathie selling. Actively managed ETFs are so weird because you cannot have large cash positions. You have to deploy it. And this is why you see her selling new things to buy other things, and she can't prepare for ups and downs. And it's almost designed for her to, perform badly in certain areas of the market. But she's a net buyer of SoFi shares. She's never sold a share to buy something else. Last story here before we leave. Galileo Financial Technologies adds 3D Secure to bolster online fraud protection. What did you guys think?
Yeah, I mean, this is something that's definitely needed. This week, the last couple of weeks, because of CrowdStrike, protecting data and, of course, protecting its fraud, that though this is a little bit different thing, has gotten the headlines. And Galileo has some really good products. And so I'm glad to see that do well. PayPal, of course, was able to through DraftKings, I believe, sell one of their fraud protection products to them as well. So I think a lot of companies and a lot of people will be looking into that. And it's great that Galileo is continuing to grow and innovate and make these sort of moves.
I think that this whole thing, you just need to read here. Card not present fraud is expected to make up about 73% of total card payment fraud loss in 2024. Using 3DS or 3D Secure, it can dramatically reduce fraud rates up to 6 times compared to non-3DS transactions. So card not present is an online transaction anywhere where the card is not actually physically communicating with the terminal. Potentially, this either adds to increased revenue per client or potential amount of clients that were looking for this type of product where they didn't want to be liable for the losses and they wanted to put that to the issuer of the cards. Well, you're going to need 3DS to do something like that. So yeah.
There's a lot of legacy companies that maybe would have been fine before the AI moment through ChatGPT, but fraud has gotten a lot more savvy using these tools. And usually the defensive tools and prevention tools, especially if your company doesn't do that for a living, lags a little bit. And so I think that this is a good tailwind for the company.
We will be covering the SoFi earnings live on Tuesday morning. We won't have a chance to, talk to the audience until the earnings. So make sure that you join us. I think the call is at 8 or 7.
We got to be up for 7 because the actual report comes out. We're going live at 7:30. So we'll have 30 minutes to cover what happened, called at 8 till 9. And then we'll do a 30-minute recap on the other end. So we got a 2-hour schedule, but you guys can just come in and enjoy the show. Thank you all so much for watching. Really do appreciate your time.